Many thanks for joining us. This is Business Incorporated on Channels Television. I am BC Adebayo. On the show today, Africa's CEOs and influential leaders gather in Abidjan for the 6th edition of the Africa CEO Forum. And South Africa's National Treasury considers partial privatization of struggling government companies. Plus, Dubai-owned port operator DP World wins 30-year management concession for multipurpose port in the DRC. Well, let's get the show started with the markets here in Africa, where the South Africa JSE index remains on the edge after Moody's ratings on Friday. The JSE index was down 0.77% at intraday, but the market here in Nigeria was up 0.28%. Egypt was also higher by 1.01% on intraday, while Nairobi closed up 0.26% on Friday. And the Gulf markets were mainly subdued at intraday as investors digested news of missiles fired overnight out Saudi Arabia, which is the region's largest economy. The Saudi index slipped as much as 0.5% earlier on before gaining 0.23% to 7,860.4. The Dubai stock index lost 0.36%, with retailer Marker, the top loser, falling 3.1%. after announcing a full-year loss of 218.4 million dirhams and lower revenue due to the closure of various non-profitable stores. The Abu Dhabi index stock was 0.78% up, while the Qatari index lost 0.47%. And in Europe, stocks advanced today as analysts say recent trade-related tensions seem to be easing. But also, the IMF chief, Ms. Christine Lagarde, has also spoken about Germany's high current account position and the need for the country to leave the euro area. Well, here's Daniel Koop from the Frankfurt Stock Exchange for more on these and other happenings at the market. It's good to see you, Daniel, or should I say it's good to hear you, Daniel.
Well, hi, Davide. Well, I guess at least you can see my picture at the moment. I wish I could see you, but yeah, I guess this is just another example how far, speaking of distance, our countries are apart today.
Well, you can also check out the visual of this later on our website. But moving on now, the IMF chief, Ms. Christine Lagarde, spoke today about Germany's high current account position and the need for the country to leave the euro area. Can you put Ms. Lagarde's comments in some context for us?
Yeah, exactly. Well, let me tell you a little bit what she said. She said that Eurozone countries should pay 0.35% of their gross domestic program in a product into a rainy day fund that would be used to stabilize the Eurozone economy in case of emergency. That's what she was saying to a Berlin audience to controllable turbulence that could disrupt the economy. Remember that Christine Lagarde has been criticizing Germany for quite some time. She's also not in favor about the trade surplus that Germany has been creating, and because of that, Germany has been criticized, such as China, also by the United States. Lagarde also said that she supports the idea of a stronger banking union between Eurozone members, a view that is not universally favored by members of the currency union, and particularly here in Germany. So yeah, those comments, at least here in Frankfurt, in the financial world, were not really appreciated too much.
The European markets are getting off to a decent takeoff this Monday. Is the storm over now for the global markets?
Yeah, that's a very good question. When I came into the stock exchange this morning, actually the pre-forecast for today's trading day did not look very promising at all. By that time, also most of the Asian markets were in the red. But then, by the end of the trading day in Asia, shares recovered. The Nikkei index closed with a plus of 0.72%. The Hang Seng also with a plus. Only the Shanghai Composite Index was down. This has really been giving European markets also some boost. The blue chip index DAX in Frankfurt is up right now with 0.8%. A similar picture also looking over to France, where the CAC 40 is up with 0.6%, and also the FTSE 100 is in the green right now. Is this now going to mean a long-term recovery? Well, I personally would be very careful. The pressure is certainly still on. Maybe many experts experts are also telling that also tariffs on Chinese goods could hurt other countries in Asia as well. And we also have to remember that just for the moment, the European Union is exempt from those tariffs from the United States. They will have to find an agreement with the U.S. until May. And after May, we certainly still don't know what is going to happen. Very interesting also that the U.S. and South Korea were able to agree on a deal. South Korea will be able to export 70% of their regular steel production to the U.S. without receiving or without having to pay tariffs. At the same time, they have to agree to import U.S. cars from the U.S. to South Korea, and also the United States would not have to pay tariffs on those as well. The German new economist minister, let me tell you that BZ is also in favor of a similar compromise. He was last week in Washington talking about trade and talking about business. Altmaier also stated today that Germany as a country cannot negotiate that all those negotiations about tariffs and possible compromises will be done on the European level.
Now, just before I let you go, Daniel, tell us what are the key market events and news headlines to watch out for in this final trading week of March and the first quarter?
Well, this rest of the week, this is actually going to be only a short trading week here, since Easter is just around the corner and the stock market here on Friday will be closed. Usually the week before Easter is a week where the stock market will be, where the stock market usually is gaining. It's still unclear if this is going to be the case. We're not going to get many reports from the corporate front. Just on Thursday, we'll be getting news regarding the growth here in the Eurozone and also from Germany. Of course, this will be very monitored, but in general, the week here before Easter is a rather slow week. But as I said, there is still this fear of a possible trade for even though shares recovered today. So with this, investors here still will be monitoring every word, mostly made by Donald Trump, very closely, BC.
Well, many thanks, Daniel, and expect to see you again tomorrow.